Hi, everyone. In this lecture, we're going to be speaking about horizontal and vertical analysis. So again, variance analysis. When you're conducting a variance analysis with horizontal and vertical analysis, you're typically looking at ways to look at trends that have happened year over year from your budget versus your actuals, or from year to year, the actual of 2020 to 2019. And as stated in the variance lecture, the differences are labeled as favorable or unfavorable. And you can use the dollar difference and percentage difference. Both companies typically like to see both. So horizontal analysis is used to measure growth over periods of time. And if you're not measuring growth, you're managing a loss, which will also be an indication of action that needs to be taken. And a vertical analysis is typically used to spot trends. And as stated in the variance analysis, some companies want to know the variance difference down to $1, and some will give a certain dollar amount in order to be provided with an explanation. So the first thing we're going to be looking at is a horizontal analysis. And a horizontal variance analysis is typically used to analyze financial statements by comparing accounting periods. So in this example, we're going to be analyzing 2020 versus 2019. And you can do a horizontal variance analysis not only on an income statement, which is what we have here, but you can also do this on a balance sheet. And again, it's used to spot historical trends. And you can do a comparative analysis, which compares one year to another, which is what we have here. The trend analysis can be a comparison of 1 year against several years. So for example, if you wanted to look at 2020 versus the past 5 years, it uses a base year and a comparison year to determine the company's growth. So let's look at this. So in order to prepare horizontal analysis, we are looking at the income statement for Netflix, and we're going to conduct a horizontal analysis on the first line items that you see highlighted with the circle in red. So how do you conduct a horizontal variance analysis? It's a two-step approach, and you have to calculate the dollar amount first, just like we did with a budget variance, in order to come to the percentage amount. So the formula for the dollar amount is the current year, which is the most current year of data that you would have, minus the base year. So in this example, we see that the revenue in 2020 for Netflix is $24,996 versus $21,156, which gives us a difference of $4,839. Now the formula for the percentage amount is you take that dollar amount of that $4,839 and you divide that by the base year, the $20,156. Multiply by 100 to get the percentage. And this is done for every single line item. Okay, so what does it really all tell us? Well, I'm looking at this and I can see that revenues for Netflix grew by 24% from 2019 to 2020, which is actually very, very good. Their cost of revenues also increased by almost 23%, but their cost of revenues are still relatively small compared to the amount of revenue. Their marketing expenses, for whatever reason, went down from 2019 to 2020. So maybe they didn't spend as much marketing from the previous year. Technology and development also increased by 18%, and general and administrative expenses increased as well. So overall, this is a fairly good picture for Netflix since their revenue has grown so much, and the percentage of increases are relatively small compared to everything else. And the fact that they had a decrease in marketing expenses helped them out tremendously. So now we're going to look at a vertical analysis, and this is typically used to spot trends. We're going to be working with the income statement as well, but as I said before, you can also do this with a balance sheet. And this is typically used to analyze trends of a company versus the industry, right? So you can do it just on the company basis, just to see how you're doing year over year, but you can also use this to see how you are comparing to other companies that are within the same industry. So for example, Fubo TV could be a company that you can use to compare the variances. And for the income statement, the revenue is the main item that everything is compared against. If you are doing a vertical analysis for the balance sheet, assets are the main item that will be compared against everything. So let's take a look at this. So everything is applied against the revenue. So you're taking the revenue and dividing it by itself for 2020, which gives you 100%. So your revenue line should always be 100%. If you were dealing with the balance sheet, your assets would be 100%. Then you get to cost of revenues. Cost of revenues in 2020 was 15,276. You divide that by the revenue. You take the marketing number, you divide that by the revenue. Technology and development, divide that by the revenue. And then it gives you a percentage. So what this means is that 61% of my cost of goods sold or cost of revenues was for 61% was cost of revenues. 9% of my actuals against revenue was for marketing, 7% for technology and development, and 4% for general and administrative costs. So now I want to look at this together, and I'm looking at 2020 versus 2019. And if you look at these numbers, you can see that from 2019 to 2020, Netflix has actually decreased the percentage against the revenue, right? So in 2019, cost of revenues was 62%, versus in 2020, it was 61%, and marketing was at 13% in 2019, and now it's at 9%. And you can see that the numbers are higher for 2019 than they are in 2020. And of course, this is due to the fact that their revenues have increased greatly. And this is everything that we just went through. So on a personal connection, so let's say you received a raise, right? And so you're thinking, all right, everything's going great. I have more money, coming in. But perhaps due to your raise, now you're going to be spending more money in some areas because you are making more money. But if you want to budget your money, you want to maybe try to keep that number the same or decrease it if possible so that you would have more in savings. So here's what we learned in this lecture. Horizontal analysis gives you a historical analysis if you wanted to use several years, and you uses the base year versus the current year to determine the company's growth. And the vertical analysis is also known as trend analysis, and it's used to analyze the trends of a company versus the industry, or you can use it just to analyze the trends of the particular company that you're studying. You don't necessarily have to compare it to industry.